In this video, we are going to see some live examples for the confirmation 50-minute entry model. So we are on the 4-hour time frame of the US dollar Japanese yen, and we are taking a look at the bearish example, just like I showed you on the previous drone example. Price took out the high point right here and then decided to break the low point from this high point, meaning a protected high point being created here, so we can put the Fibonacci from the high down to a retracement point. Normally, we are entering on the 71 level on the 4-hour time frame with a simple limit order here, stop loss here, and TP here. And our point or purpose here is to utilize on this overall expected 4-hour movement that it will come up to the 71 level, will react here, and will drop down to the 0 level. So the whole purpose is to utilize on these movements and to confirm ourselves into more sell positions around the 71. In the previous video, we talked about 61 level 2, that usually fake outs happen there, that usually price reacts there, and once price reacts there, it can be taken as a sweep of liquidity when price sweeps out the reaction. Here in this case, even on the 4-hour time frame, it is visible that price came up somewhere around the 61 level and then it dropped down and that it swept the liquidity into the 71. So without further ado, let's just switch down to the 50-minute time frame and look for confluences, look for confirmations that might happen around the 70 level that can confirm ourselves into more sell positions, targeting the original 0 level and the partial level. So first of all, as I told you, price came up somewhere around the 61 level. It almost mitigated the 61 level and then it decided to drop down and shift some market structure even here and even here. So without further ado, price just swept the whole liquidity pool created around the 61 level into the 71 straight, and here the magic happens. So this can be taken as one liquidity sweep because price created some accumulation around the 61 level, created a market structure shift, then it swept the liquidity straight into the 71 level. So once price arrived into the 71 level, we are scaling down to the 50-minute time frame and we are looking for these opportunities. We are looking for the confirmation opportunities. What we see here is that price skyrocketed into the 71, that it created a retracement here, that it started to follow the exact same bullish structure to the upside. So here I'm just going to draw that what has happened. Price came up, came down, came up, broke the high point, came down, broke the high point again, and then it decided to break the low point right here, meaning it created a market structure shift. It created some accumulation stage right here, meaning liquidity has been created, but from there, the market structure shift has happened. So this is exactly what has happened. Price arrived into the 71 level here, it continued the bullish structure. Confirmation will not always happen exactly on the 71 level. Sometimes it will go above it. Sometimes somewhere around the 1 level and the 71 level, the confirmation will happen. So it's not guaranteed that it always happen on exactly the 71 level. You are just looking for the confirmation somewhere in between the 1 and the 71 level. So here price has arrived into it. Let me just go back to this region. It has arrived into the 71 level and that it formed the bullish structure here, the last high point being created, which was exactly right here. And this last high point and the last break of structure line here and here has been formed by the last recent low point that is located exactly right here and here. After forming this last recent high point, it can be taken as the sweep out of the previous high point because after forming this high point, price aggressively dropped down with heavy volume and shifted the market structure from bullish to bearish because the last recent low point that created the last recent break to the upside was broken, meaning a market structure shift has been created on this line. If you take a look at the overall live example, if you take a look at the live candles and the live chart, you will see that price created the last recent low point, came up, broke the high point, and after this high point was taken out with a body closure, as I told you, it's completely fine to have a body closure, but price has to aggressively reject there, reverse, and take out the last recent structural low point and shift the market structure from bullish to bearish. So here on this line where I just marked the break of structure, a market structure shift has happened because price decided to break below that low point and create the shift in the market structure. So structure has shifted from bullish to bearish and we are expecting this overall bearish structure to continue. So if you take a look at this high point, this took out the previous high, then it took out the low point, shift has happened, so we are simply pulling the Fibonacci from this high point down to the low point where the retracement will happen. We don't know where that retracement will happen. We don't know if it will be here, we just have to place some more candles. And what else do we see right here? We see that liquidity has been printed. So there is liquidity. Basically 1, 2, 3, quadruple equal taps. We have 4 equal taps created just below the 71 entry where we are going to enter in the market. So technically this trade is a full criteria trade because we have first of all a sweep on the 61 level, another high takeout right here. From the high takeout, there is an aggressive volume drop, there is an order block, there is a market structure shift, and there is liquidity plus created for the 71 level entry. So here we have a full criteria entry model on the 50-minute time frame in confirmations. So we are setting a limit order on the 71 level. We are setting the stop loss up to the previous high point, which is a 15-minute protected high point that comes from the 4-hour 71 level. And we are targeting the overall 4-hour market structure low point, which is this one down here, which gives us the opportunity to collect 18 risk-reward ratio. Yeah, sometimes it's 5 because the structure is way too low. Sometimes it's 10, sometimes it's 15, sometimes it's 18. It ranges in between 5 and 15 usually. So this 18 risk-reward ratio is a pretty nice risk-reward ratio that we can achieve. And obviously, as I told you in another video, I will break down that how we take partials on this minus 0.27 level. We are going to take one partial here because it is not granted that price will drop down into the original 4-hour structural low point. So therefore, if you enter in a 15-minute confirmation trade, you want to make sure that you take something home from that. You want to make some profit on that, even when price not going down to the 0 level. So we entered there on the 71 level. We are taking partial here, which I will explain that how we take the partials. But the original target point is the 0 level, which will give us 18 risk-reward ratio if it hits the target point. So switching to the 4-hour time frame, you will see that how this trade plays out. So originally, we are into two trades because we have entered into the original 4-hour trade idea right here, and we have entered into the 15-minute one. So these are the two trades we are inside of. Ultimately, it gives you 20 risk-reward ratio or 20 plus risk-reward ratio if both of the trades are hitting TP. One more really important thing that you have to consider, that once you enter in a confirmation trade and price moves below the original entry points, you want to set this to break even because you don't want to over leverage yourself. But we will talk about this once again in another video because I'm dedicating a separate video for each of the topics. So here you have entered into two positions and the original target point is down there. Let's just play out that how this, let's just replay that how this trade plays out. Price comes down, 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 and bam, it hits the TP. So instead of having 2.5, 2.4 risk-reward ratio on the original 4-hour idea, you just utilized on the 15-minute movement into a 15-minute confirmation, which ultimately gave you another 18 risk-reward ratio as an extra profit. Yeah, I know you're going to say that, yeah, this is insane. I say the same thing because this is insanity. This is a really, really, really strong pressure, a really strong confirmation that you can apply time by time. Once again, it is not guaranteed that it will happen. You won't see confirmations everywhere. But once you see a confirmation, once there is a confirmation on the 71 level, it will give you an extra profit that basically leaves you without trading for a whole month. Because achieving this risk-to-reward ratio from one trade is basically enough for a whole month. And once again, this is not going to happen every time. Sometimes price will just come into the 71 and will drop down without leaving you a single confirmation or single continuation trade. But the point here is not to force every opportunity or not to see an opportunity in every movement. The point here is to only grab those opportunities which are true to the plan. And once you grab those opportunities, the risk-to-reward ratio that you will gain from these opportunities will be insanity. And yeah, this is the first example. Now let's just see another example for a bullish trade. So the next example will be a bullish trade, just to take a look at every side of the market. So here we are on gold on the 4-hour time frame. We have a really nice clean bullish trend on gold. So we are looking for buying opportunities. We are seeking for the sweep of the previous low point, break of a high point, internal, external, you know the 4-hour plan. Here, Price has swapped out this previous low point right here, and from this low, it decided to break the high point, and then you can pull the Fibonacci from the low point to the high point because you have the entry criteria system. Here, sweep, here, break, volume, order block, everything is there. Here on the 71 level, price mitigated the 71 level, but left us without giving a confirmation entry on the 50-minute time frame, so you can't enter there on the 50-minute one, you have to look for new opportunities. But the new opportunity came right away, because here price confirmed itself by sweeping out this low point. There is a sweep of the liquidity on the previous internal low point, and then right after sweeping out that liquidity, it broke the internal high point with volume and with forming an order block. So therefore, you ultimately have an opportunity to look for another position. Because you have a sweep of liquidity, you have a break of structure, you have volume, and you have order block. Meaning all of the criteria on the 4-hour time frame are fulfilled, so you can pull the Fibonacci from the low point to the high point. This means that you are looking for a 50-minute confirmation on the 71 level, and you are setting a limit order on the 71 level on the 4-hour time frame as well. Now let's just switch down to the 50-minute time frame and take a look at how that 71 level will react, what that 71 level will do. We have two levels, we have the 61 and the 71 level. We are looking for a fake out on the 61. We are looking for some kind of confirmation here that can be faked out into the 71, can be liquidated into the 71, where we can look for another real opportunity. So the major plan we are looking for right here is a pull back down to the 61, a structure shift, which will be swept into the 71, and then another structure shift. Or the second opportunity we are looking for is that price won't react on the 61, will just simply come down to the 71. And here on the 71, it will sweep a low point out, will shift the market structure from bearish to bullish, and you are looking to enter on the 71 level on the 50-minute time frame. So let's just see how this will play out. Price rejected on the 61. Couldn't really create any structure shift in the market, so therefore there's nothing we can take into liquidity sweep. And now we just arrived into the 71 region. Here in the 71 region, we are looking for reversal confirmation opportunities. We are looking for the confirmation of price action. For example, a pullback, take out of the last recent low point, a shift in the market structure, and then a long opportunity. So let's just see how it plays out. Yeah, price is dropping even further below the 71 level. So in this case, when there's no confirmation given at exactly on the 71 level, don't panic, because confirmation can come from anywhere in between the 1 and the 71 level. So here what you see immediately is that price created the sweep of this low point right there. There is the sweep of the low point, and then there is the break of the high point that created the sweep. So there is a market structure shift. Structure has been shifted from bearish to bullish because price has been creating a bearish structure here. You can see that there is the 50-minute bearish order flow, took out the low point, and then broke the last recent high point. So immediately there is a confirmation. Let's just play price forward. Here, I knew that this movement will happen because I have entered in this trade. I mean, I took this trade in live on gold. So what has happened here is that you can see that price created this overall market structure shift. We could put the Fibonacci from the low point to the high point, but the 71 level wasn't mitigated. And here at this movement, price just decided to shift even more structure, shifted many other structural points. So the market structure shift has really happened because price broke several 50-minute high points after taking out the low point. This movement, this gap that you see right here, is only visible on Oanda, where we are currently analyzing the time frame and charts. Let me just show you that it is not visible on other liquidity providers. So you can see that this is the exact same movement. This is just one candle. So on Oanda, it showed the false data. You don't really have to care about it when you see a gap like this. That usually is just one candle. Your brain has to fill this up with one candle, and that will be basically the whole outlook that you're going to see. So price here swapped out the low point, shifted the market structure from bearish to bullish, broke several other high points. So several other structural high points being shifted. So ultimately, that is a trade idea because we have a sweep out, we have a market structure shift, we have a volume gap. There was a volume gap created immediately right there, and even another volume gap being created right there. There was an order block. Every criteria is fulfilled because we are seeking for the exact same criteria on the 50-minute time frame as on the 4-hour time frame. So we are just setting a limit order here on the 71 level. There is the stop loss, and we are targeting the original external high point right there on the 4-hour time frame. Here, Let me just extend the trade, switch to the 4-hour time frame, and take a look at how this trade plays out. So you're originally into two ideas. You are into the original 4-hour trade idea right there, entry there, stop loss there, and the TP is exactly here. And now you're scaled yourself into a 50-minute confirmation trade that gives you another, let me just check if it hits the TP, it gives you another like 15 risk reward ratio, if I'm not mistaken, 11 risk reward ratio on top of the original 2.5% profit given from the 4-hour idea. So let's just play out this trade, how it plays out. Moves to the upside, and then suddenly it hits the TP. This is the power of the confirmation, because instead of having 2.5% profit only on the 4-hour idea, you're giving yourself an opportunity to have a confirmed trade on the 50-minute time frame that will possibly lead you up to really huge risk to reward return. So this is the power of the confirmation, and this was the first entry model. Let's just check out the other two.